on to the fourth note that I'm asked for here, which is the dividends one. Dividends is not one of the ones that comes up every year, but is one of the more common ones to get kind of rotated into that kind of floating to where different things can come up from year to year. This is just putting down on paper something I'd looked at already when I was doing my workings. So I'm given dividends paid 111 grand in the trial balance, and in piece of information F here, I was able to split that up between ordinary dividend and preference dividend. So the 111 grand take away the preference dividend is always the same. It's 7% of 600 grand, so it was 42 grand, and subtract those, and 69,000 is the ordinary dividend then. Okay, I think I made a mistake when I was doing that in the workings. I had it down as 68,000, but it should be 69,000. All right, so what we are going to do is just show the 42 and show the 69. Number 4, dividends. So we're just going to split it up, as I say, into ordinary dividends and you say there is a dividend paid, and then here's where we need to do just a little bit more work. So the ordinary dividend was the 69,000, and I just need to put in how much is that per share. Okay, so I have got 800,000 €1 shares, so that must be 800,000 euro worth of €1 share, so it's 800,000 shares. So this 69,000, I'm going to divide that by 800,000 to work out what's the dividend per share, because that's how they're announced. They don't just say I'm paying a 69,000 dividend. They say 69,000. I'm paying a dividend of, that will be 8.625 cent per share. So that's in euro, so in cent, that's 8.625 cent. All right, so dividend paid 8.625 cent per share, and that's 69,000. So I put the ordinary one in, I put the preference one in then as well. So preference dividends, so dividend paid. The preference dividend is 7% of a €1 share, so 7% of €1 is 7 cents. So dividend paid 7 cents per share, and that was 7% of 600,000 shares, 42,000. All right, so that is just splitting up the 111,000 dividend in my profit and loss account into 69 ordinary, 42 preference. All right. The fifth and final note I'm asked for on this question is the tangible fixed assets. That's one of the ones I'm asked for every single year. This is basically giving the information I normally give on the face of the balance sheet. So I normally put in cost, accumulated depreciation, and net book value on the face of my balance sheet. In these ones, I just put in the net book value. Okay, so I don't put in that much detail on the balance sheet. This is where I put the detail in. I actually put a tiny bit more detail in, and I just lay it out a little bit different to how it's laid out on the balance sheet. I basically go down the page as opposed to across the page, but it is just giving you that information that normally you put on the face of the balance sheet. So number 5 is your tangible fixed assets. And normally I would go kind of, buildings, motor vehicles, office equipment, and I'd have cost, depreciation, net book value. I'm going to flip that, and I will have like asset 1, asset 2, so buildings, office equipment, motor vehicles, all your cost, then everything around depreciation, and then your net book value down the end. Okay, so you're kind of flipping the way you normally do it. So your tangible fixed assets. So in this question, my only tangible fixed asset was a building. Okay, so up the top, I'm going to put buildings, and then just, I suppose, just to be fully correct, I'm going to put the total in. So sometimes you'll have buildings and vehicles and total maybe. Okay, my buildings and total are going to be the same here because I do just have buildings, but you should put both in the notes still, even though they're just going to be the same figures. So I'm going to put in so I'm going to do cost first. And as I said, I put a little bit more detail in here than I do in a kind of section 1 balance sheet on the balance sheet. So cost, you're going to put in your opening balance. So what was the cost of my building at the start of the year? And just be careful here. So buildings at cost 1st of January, 1.4 million. But remember, this is the balance sheet at the end of the year. So this is just telling me that the buildings I still own at the end of the year cost 1.4 million. That's what was sitting there as cost at the start of the year. But in this question, I was told that land belonging to the business, which cost 110 grand, was sold for 270 grand during the year. So that means that land of 110 grand would have been there at the start of the year. So you need to add that on to the 1.4 million. Okay, so because the sale of the land has been put through the accounts, they have taken the 110 out of there. So that is after the 110 has been removed from cost. But if I'm looking at the opening cost, I'm looking at the 1 January cost, what was there at the start of the year, you would need to include that 110,000. Okay, so and also I suppose that's land as well, so I should call that land and buildings rather than just buildings. So your opening balance then is not the 1.4 million, it's 1.4 plus the 110 grand, so it's 1510. And then your total is just going to be the same. All right, so just you do get disposals in these questions a lot, so just watch out for that. Okay, so you need to find the cost that was there at the start of the year in that note. What happened then during the year? So there was a disposal of 110,000. If there's any additions as well, you put them in here. So you're accounting for how you get from the cost at the start to the cost at the end. There was no additions in this one, but there is revaluation. So that is increasing the cost of your asset. So the revaluation was this 1.4 million, I revalued it as 1.5 million. So that's an increase in my revaluation of 100,000. Okay, as I said, you can get additions in there as well, but there's not in this question. 1.51 million, take away the 110 plus the 100 grand is giving you the 1.5 million that you have in your accounts as cost. All right, so that's your closing balance. So that's like the cost column that you normally have. So like I said, a bit more detail. We're putting it in at the start and the end of the year, and we're just reconciling those. So what was disposed, what was revalued to get us from the cost at the start to the cost at the end. We're going to do the same then for depreciation. So we're not just going to put in accumulated depreciation at the end of the year. We're going to put in what was it at the start, what is it at the end, and how has it changed, okay? Or why has it changed? Why is it increased or decreased? So you're going to have, so I think it makes this cleaner if you just skip a line maybe before doing your depreciation. And you're going to have an opening balance again. So opening depreciation 96,000. So the land wouldn't have been depreciated. Okay, you tend to depreciate buildings but not land. So the buildings depreciated 1st of January. Buildings depreciation 1st of January, 96,000. That's the opening depreciation. What do I do then? I have a depreciation charge for the year. Okay, so I would have done, I think it was 1.4 million, yeah, by 2%. So 28 grand was my depreciation for this year. So you put that in. So you put in this year's depreciation charge. And then remember, when you set up a revaluation reserve, you clear out all the accumulated depreciation that was there. So when I set up my revaluation reserve, I moved the 96 and the 28 depreciation into that revaluation reserve. So they shouldn't be sitting there when you revalue your stuff at the very end of the period. So let's transfer to revaluation, or just revaluation is fine. So that was the 96 and the 20, that's 124 grand. And that's going to give me my closing balance, which in this question is 0. So because I revalued my only asset at the end of the year, I cleared out all depreciation that was there, and I have 0 depreciation at the end of the period. Okay, so just some questions, you might have that maybe in land and buildings, but you might still have some depreciation sitting there in the other assets you have in the question. So you might have a second row with some closing balance there. All I'm doing now is my net book value. So net book value on the first 2000, and net book value 31st to the 12th 2000. So at the start of the year, it's net book value is the same. It's cost less accumulated depreciation. So your 151 take away your 96 is going to give your net book value at the start. Your closing balance is then your 1.5 take away 0. That's going to give you your net book values at the end. Okay, so 1.51 take away this 96 grand is 1414. And then 1.5 million take away the 0 is just 1.5 million. So that net book value 31st December, this total closing net book value, that's what should go onto your balance sheet. So that's what should tie in to the number you put into balance sheet. Okay, so that's what should be the same. All right, so that's the 5 notes I'm asked for in this question. All right, as I said, I've got a kind of spreadsheet tracking which ones out of the kind of 11 they give you in the book come up most often. It is 3 of those ones that I went through on this question: the tangible fixed asset one, the policy one, the operating profit always come up. Dividends is quite common. Contingent sometimes. Interest is quite common. Like I said, you'll see it on the tracker. A lot of the other ones are more straightforward. Like the tangible fixed asset one is long. The policy one, you do need to remember a couple of sentences for that one. The rest of them I think are a bit more straightforward. They're more like the dividends one, where you're just kind of listing stuff, or the operating profit one, where you're just listing a few items. All right, but that's this question done then in full.